Bismillah ar-Rahman ar-Rahim. Excellency Rabia, distinguished guests, it's a pleasure to be here. And as per the request of Dr. Muhammad, my presentation won't be on slides. I'll try to go through it very quickly about private-public partnerships in healthcare. But it's available if you wanted later on to share with you, I could pass it on. I'd like to go very quickly through a market review and demand about the need in private-public partnerships in health, the case for financing healthcare projects and programs, the financial instruments that are used, and at the end, financing in today's economic climate. The single biggest industry in the world is healthcare, almost approaching $4.5 trillion a year. Growing fast, it touches everybody's life. We all get sick, or someone very close to us one day will get sick, and everybody would like to get better. Two fundamental questions. Who provides healthcare? And it's the private sector or the public. This other question, who pays for it? The state or the citizenship? With this combination, one could see at the bottom of the graph, Canada, where the government is the provider of most of the public health costs for their citizenship. The UK is a little bit further up, and as Excellency Rabia showed, Saudi Arabia a bit further, and at the very end, the extreme, is the US. Private-public partnerships started in the United Kingdom some time ago. Obama reported in The Economist some time ago that 18% of the GDP in the US is spent on health. But there is no single blueprint for success. Demand for healthcare is on an upward spiral. The world population will be about 9 billion by 2050. The population is aging. Healthcare is improving. People are living longer, and the costs are escalating. There is increase in the chronic cases relative to acute cases, more technology in both diagnosis and treatment, which is giving us more age and older and healthier life, more information, more informed patients, inflation of the pharmaceutical costs, and the legislations that are there. Demand has increased, but funds have reduced. The crisis over the last, since 2007, reducing liquidity, reducing availability of debt and equity, which cost the increase in cost of funding, as well as the reduced appetite for risk by the financiers. And I'm talking this from a private-public partnership if someone wants to raise the money to get involved with governments. So at the end, there's a reduced pace and the deliverability of the infrastructure program. The government can seek to fill the gap through public sector provision, motivating the private sector participation, or launching private-public partnerships, or combination of all the above. Each provision requires its own form of financing. And the private-public partnership could be as simple as operating a hospital for a government to the extent of raising the money to build it, equip it, and operate it. It could be as simple as just supplying the equipment for it and maintaining those equipments for a period of time. A lot of the time, the argument about private-public partnership, some governments say, we have the money. We don't need the money, so there is no need for the private-public partnership. It's not about really raising the money, because it's more like trying to get the private sector to put up their own money, where a lot of the time, projects finish on budget, on time, when sometimes in the public sector, it drags on a little bit longer and exceeds budget. The private sector is responsible to look after its own asset, because that's the asset of the private sector for the period of the project. Maintain it well and ensure that the deliverables are met, because they are being delivered to a client who's expecting and has capped its costs for a period of time. We've been involved in several different kinds of private-public partnerships, as simple as providing some equipment and ensuring that during the period of time those equipments are well maintained and provide the service to the government, to raising, in the Caribbean, $125 million to build 2 hospitals for the islands of the Turks and Caicos, and to ensure that the operation for 25 years of those 2 hospitals, which are supplying and covering a population of a small island of 35,000 people, the cost to the government, one of the arguments that have been, and now recently in the UK, that the cost of private-public partnership is a little bit too much for some of the governments to absorb. There is such a wide range that a lot of the time governments could work closely with the private sector to try to see what is most suitable for the government to try to maximize the benefit that they're getting from the private sector. There is no one single recipe for success in here, and the thing is just to say that private-public partnerships could be from as simple as maintaining equipment in a hospital to all the way to building it and equipping it and operating it for a period of 20 or 30 years. Thank you very much.